The Australian dollar has softened this week, falling about a cent to trade mostly around the 75-cent area. The domestic calendar has been quiet, but we did see the Reserve Bank minutes from its July meeting, which left open the door for a rate cut in August. The Australian dollar has been hurt by increased pricing for a Federal Reserve interest rate increase. A week after the Brexit vote, pricing for a September Fed hike was 0%. It's now close to 25% chance. This has come as markets have calmed since the Brexit vote, and of course US stocks have reached record highs. This is likely to encourage the Fed that it is on track to resume raising rates within the next few months. So while the Australian dollar often benefits from the optimism implied by rising global equity prices, at the moment, that improvement in equity sentiment is supporting the US dollar because it makes a Fed hike more likely. It has also been weighing slightly on commodity prices, which are priced in US dollars. In the week ahead, the Federal Reserve will remain in focus with the FOMC meeting. Markets are very much expecting no change in rates, but there will be interest in the statement as always. We look for a more upbeat tone, helping maintain expectations for a Fed rate hike in December, and this should support the US dollar. Australia's calendar is dominated by the second quarter inflation numbers due out on Wednesday. Westpac looks for a 1.2% reading on annual inflation, which will mean that Australia's inflation rate has been running below the Reserve Bank's 2 to 3% target since late 2014. This should reinforce market expectations that the Reserve Bank will cut interest rates at its August meeting. Such an outcome is already 2/3 priced in. We expect this to be one of the factors that weighs on the Aussie dollar in the week ahead. The other major event to watch is on Friday when the Bank of Japan policy decision is announced. Markets are expecting yet more monetary easing from the BOJ. A range of options are on the table with great uncertainty over the outcome. One option is that they could increase the amount of equities that they're buying each month, effectively with printed money. If markets are disappointed by the outcome, the yen will strengthen very sharply. This will weigh on equity prices and may well hurt the Australian dollar. So all up, it looks like a volatile week ahead for the Australian dollar, trading perhaps a 73.50 to 76 cent range and probably emerging at the weak side of that range. We'll speak to you next week.